Well, hello folks, I'm L.A. Little and this is your weekly NeoTA wrap. When we take a look at these markets, we do it from a neoclassical perspective. Each time we ask ourselves just one question: what happened last week? What does it tell us about the coming ones? I do this show every Sunday evening, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel L.A. Little. If you haven't subscribed, you may want to. Just reach up there, hit the subscribe button. Anytime content is pushed, you'll be notified. It's a good, easy way to stay up with what's going on. And what happened last week was a big rally to the top side. You know, we talked about the market was oversold. It was probably going to get a bounce. We talked about that last week on the Sunday show. And boy, did it get a bounce. It got more of a bounce than probably most anyone expected. It just rocked higher. And, you know, what can you say? When this market moves, it moves. That movement changed the trends in a number of the indexes, a couple of them. Also transitioned in a number of the sectors, and in particular the sectors that got big moves were energy, right? XLB, where is XLB? Here, right? These got the biggest push. That was people moving into stuff that was totally oversold, totally wiped out, had been. They moved into it, they bought it with a fury and a flash, and they drove that stuff 10-15% higher, you know, even on the ETFs themselves. And it was just an oversold bounce, and we can look at that here in a second. But first, let's take a look at the indexes themselves. So here's the S&P. So if you remember, you know, 2 weeks ago, it looked like this market was going to try to break, right? It was coming down here, going to try to break out these lows. It did not quite test, just shy. And then it got the bounce up, and just kept going. And that was after the Fed day sell-off that took us back down to the lows. So we go down to the lows, back up, and this sure looks a lot like what we saw once before. And once before, I'm talking about when we were in this big range up here, right at the highs, before we got this breakdown. We were doing the same sort of thing, right? This bouncing around inside of a range and just going up and down, up and down. Folks, it's here again. Now you have an even larger range. You know, back here it was a 50-point range. I take that back, not 50. It was a 90-point range when we were back here, right? It was about 90 points. Now you got about 150 points. And so the range is expanded. It's at a lower level. You're bouncing back and forth. You've got a lot of resistance up overhead from about this 2043 to about 2070 area. That's going to be a tough spot if it gets up there. And in fact, if this thing wants to rock on up there right away, I think it's an invitation to sell it, because you know this market's not going to just go straight up. I mean, you never know for sure, right? But the odds of this is like, you know, 1 in 10,000 or something. It's not very high. The more likely case is that this thing's going to, you know, find resistance somewhere in this area, maybe as high as 2070, and it's just going to come right back down again. At least come back down to some sort of a support level. And if you try to pick those out, you know, I'd be looking at the overlaps in places of significance. I'd be looking at the big bars on volume. That's what I would be looking at and saying, hey, you know, this is where it's probably going to try to come back to. Is it going to crash and burn? I don't think so, at least not yet. Is it going to rock higher, you know, shoot to the moon? I doubt that too. It's going to range. And it's going to range trade in an area that, you know, is expanded now, you know, from here to here. And inside that, you can kind of divide it up into half, right? It's kind of half and half. You're up towards the top of the range. You were down here at the bottom of the range, and you'd rock all the way back up, pretty much straight up for 2 weeks with big gains. So that's the S&P. If we look at the NASDAQ actually trailed last week, did not lead, which typically is not a good thing. Typically, you want technology to be running to the top side. So technology, here's the Fed day, sells off, right, gets its rally up, But then look at the push here compared to what was on the S&P. Not nearly the zest here as you saw there. You're a long way from the swing point high where the S&P is at that swing point high. And that's a big difference this time around compared to what we saw before. If we move over to the small caps and look at those, the small caps themselves, the same sort of action, and they look more like the S&Ps just coming from a lower level. Now remember, the small caps were the only index to actually break to the downside, but they got nobody else to follow them. They come back up now. Now they're back up to get up here and test into these areas again. And all of these are going to have swing point lows up here to deal with once they get back up there. If we pull it over and we look at these on a little bit longer time frame, I've got the weeklies here. You can see what's going on probably a little bit more clearly than what you saw there from the dailies. You had a range. The range was up here, right? You break down, you set up another range and another range below that, and you're trying to get back, well, actually in all cases, you're back into the middle range, and you're trying to get back up here to test up into the top. Now that test up into the top is going to be the bearish retest and regenerates off the prior swing point lows. And in most cases, you're actually starting to get that now. If we look at just say the Russell here again on a weekly basis, the Russell broke this swing point low on the way down. What's it doing? It's coming in and it's testing it now. Where's that test? The top of the test. It come within 6 bars, so it can probably get to the other side. That test is right here. What is it off of? The breakdown bar. And if you go across these and look at all of them, I'll just pull up the S&P again, and we'll look at that one. If we look at the S&P and we do the same sort of a walkthrough, you're going to see the same sort of thing, right? You break down, you get the break here, right? That's the trend transition. That breaks this swing point in that one, and it also broke this one as well, and in this one too, right? So you broke 4 of them on one move. Now you come back in and you do an automatic retest regen bearish, right, off of this one. What is that going to do? Well, you come back within 6 bars. In other words, you did it on the very next bar. You come back within 6 bars. You're still testing it. That says that you can probably get to the other side of it. Well, where's the other side? If you look at the top of it, it's 2077. I was just saying 2043 to 2077 is the area. The 2043 number has to do with the daily swing point lows that broke. It's the lowest one there. And the highest one is this weekly. As you come back up into these levels, this is going to be a tough spot, a tough cookie to crack back up at these levels. And you can see the resistance all mapped out for you here on the TA Today charts. It knows where it's going to be. That's what the algorithms are there for, is to figure that out. And it tells you, straight away, you got a lot of selling up there. And if you just think about it from a logical standpoint, it makes a lot of sense too, because what happened? You had, 6 months of buyers up here that are underwater. They just want to get out for even, and as price comes back up into that level, right, that's where they're going to try to get out for even. Everybody wants to get out for even. Nobody wants to take a loss. I know a friend of mine who's been hanging onto a stock for 15 years trying to get out for even. I don't think anybody talked to them about opportunity cost, but then that's a whole different story. If we look overseas, so we got the bounce, right? We kind of double bottom down here, as everybody's calling it now. And truly, if you look at Edwards and McGee, that is not a double bottom. A double bottom is where you have 2 or 3 months in between. So we could call, for example, if we wanted to call a double bottom, what would be a double bottom would be this and this. It wouldn't be these two, because these are too tight, right? There wasn't enough time in between them. Here you have plenty of time in between these. So anyway, that's an aside on the classical TA stuff. If we move over, so you have quote-unquote bottoms in place, at least short term, and if you move over to the world markets, you basically have bottoms forming there as well. If we look at the DAX, for example, the DAX came down, and the DAX actually did the test, right? Got up underneath, just like the Russell, got up underneath this price point, did it right here, had no volume on the comparison, right? And what does it do? Comes off of that and it's working its way back up. Where's it working to? It's working into resistance. That resistance area is going to be pretty steep here. You can see this big high volume bar there. That was, I think, a triple witching back, a month ago. And that was the one that, kind of precipitated this big move down. So that's going to be a spot. It's going to be tough to get over. And so as the DAX comes back up, the DAX is going to do that same sort of testing that we were just talking about. But you have the same scenario, right? Goes down, can't find new sellers at lower prices, starts back up. Now, if you look at our markets and you look at the European markets, there's quite a difference. And they're the one doing QE now. It's quite a difference here in the way these things have set up in terms of price. On the DAX, for example, you kind of have three quadrants again. I didn't draw them out quite proportionally. This one should be a little bit smaller, but you kind of have three of them, laid out. Those three, and I'll just kind of touch them up as I talk, those three are the ones that are controlling price, on the way up, on the way down. And as the DAX comes back up to test into this area, that's the area that is going to give resistance, just as it does on the S&P 500. It's the same thing here on these. As you come back up and you try to get into the higher level, that's where the sellers are going to be. In this particular case, you have not very much in terms of buyers here nor here. It's really up here. So if you're asking, where's the heavy resistance going to be, it's going to be up in this area up here, right? That's where everybody, quote unquote, wants to get out for even as well in that market. That's the DAX, but the DAX, the point here is the DAX done the same thing. It's trying to put in the bottom. And if you walk over to, say, Hong Kong, you see the same sort of scenario down here where it tests the lows, tries to get under it, gets back up and over it. And we can look at the Japan, the topics, the Nikkei itself, does the same thing, gets under, back over, bounces back up. All these markets are all kind of, saying the same scenario, and that is that for now, they have some sort of a short-term bottom in place. And now the real question is going to be, what does this test look like as they come back down? I want to move over and take a look at some of the OX markets because, there's a lot of excitement in gold stocks and energy stocks and so forth. So it's probably worth a few minutes here just to kind of look at these. So here's the gold shares. I've got just the GLD up, which is a proxy of the futures market. It's coming back up, wants to test this top. I think we talked about it last week and saying that it probably could get up there. That's where the high volume high stays. If we look at it on the on the weekly, this is just an oversold bounce. And matter of fact, last week I think we talked about all of these markets like this that we should expect that they're going to make their way back up there to test again. And that's exactly what this is doing. So you have this high volume spike here that it's going to try to test into, and the bearish retest regenerate, which has some volume on it, which is just above it. More than likely, you're going to see it test right up to the top of that and probably come back at that level. If you look at it just on a projection move, you've got a little ABCD structure here that takes it right to there, right? So everything kind of lays out that this is the place it's going to try to get. And when it gets there, I doubt it's going to do anything more other than come back. And it's at that point that we can start to look at it and say, okay, is there something else to this or not? If you look at the gold stocks themselves, the gold stocks, of course, benefiting greatly. They're back up, testing those highs already. If you pull it back, what are they doing? Bearish retest, regenerate, coming back into it. 1645 is the number. You're almost there. As soon as you get back up in there, I think you're going to have problems. Energy stocks was another group that did the same sort of thing. I've got the XLE up, so this is like the big cap integrated guys. Comes down, makes a big high volume low, right? Bouncing up. Can it get higher? Sure, it can, because it was so oversold, right? The bearish retest regenerates way up here. So it can trade up into that area. It would be the first time back within 6 bars. Outside of 6 bars. So it says the bottom of this is probably all you can expect. You look at the price point, 71.70. You're trading at 68, almost 69 now. So you're only talking another $2 on the way up, $2.50 before it runs into problems. But there are others in the group that moved even stronger. I mean, look at the IEZ, which is the iShares for the oil, equipment, and services. This thing last week, right, had the huge spike. So you go from a low on Friday of a 35 bucks almost up to 43, $8 on a 35, 22%. You know, these are huge moves, but put it in context. It's just bouncing. It's coming back into swing point lows. Folks, if you rode this up, you know, pat yourself on the back, right? It was a good trade, but it was a trade. Don't get, you know, or don't fall in love with these things now that they've made these huge bounces, because they're going to probably just fade back in once the bounce is done. And, you know, that's going to happen as it comes into those areas where you have huge, you know, set of sellers, which is what? It's your bearish retest regen areas. Another one, oil and gas exploration, same thing, right? Moves from 31, roughly, let's just call it 32 up to 41. You know, so what do you get? $9, $8.50 on 32? You're talking huge percentages. But the big move is already in. Yeah, I can spike a little bit more. This big volume surge, that's short covering. It's going to come back down. You know, if you're going to buy it, what you want to do is you want to see how it comes back down, at least if you're going to buy it at this point. See how it comes back down, and then measure it from there. So, you know, if we go back and say, okay, what's happened? We had huge oversold bounces. We had it in those areas that were the most beat up. Those were the ones that moved the most. That took the indexes off the low. Why did the S&P lead? Well, because all this junk got bought. But this junk's not going to continue to get bought unless there's a reason. And that reason is only going to develop if, in fact, this junk isn't junk anymore. We're going to have earnings. We'll find out how those earnings look. Earnings season, you've had a run up into it. Usually that creates a sell the news. So if you ask me what's going to happen this week, you're going to go sideways at best, probably down. And so, you know, you should plan accordingly. That's it for tonight. As always, I thank you for joining me, and I ask you, you know, share what I do with you so that I can do more for you. I'm LA. This is and was your weekly NeoTA wrap. Have yourself a great night and share it with a friend. Take care.